All right, let me welcome once again to another exciting morning market review. We're just giving time so that we can have more person join the room. This is our morning market review, which we normally have every day, Monday to Friday, 8 a.m. in the morning, 8 a.m. to 9 a.m. in the morning. So one solid hour of market analysis, okay? Of course, market review. So this is the session we get to review the market for you, give you tips and tricks on how to navigate the market profitably. And of course, one of our aim here is to make sure that you are always in profit, okay? You're always doing well as a trader. So I think we can get started right now. The number we have now is okay. So we can get started right now. So this is for just joining us. Again, this is Relative Money Market Review. My name is Emmanuel Odogwu. I'm reaching you from the beautiful city of Port Harcourt. So let's just do what we normally do. We normally like to start by looking at fundamental events, right? Fundamental events. And we have different websites where we get to see the fundamental events. So fundamental events are actually fundamental news, right? News that can affect the market. So they are in categories. We have the high impact news, low impact news, and of course the medium impact news. But generally, we like to consider focus more on the high impact news. Okay. So one of the websites you can get to see news for those for joining us for the first time, you can see it on forexmarket.com. You may want to write it down. You can also see it on www.investing.com. You can also see it on Trading Economics, Daily FX, several websites where you can get to see fundamental events. So let me share my screen with you guys so that we can start from there. So I've been able to share my screen. I want to believe you can see my screen. You can see my Forex factor. Okay, just type FF on the chat room. FF, that will mean Forex Factory, indicating you can see it. You can hear me, please type FF. Okay, I can see you there. Thank you very much. All right, thank you. So to get to this website, those for joining us for the first time, you just need to go to your browser, and then at the address bar you type www.forexfactory.com. Forex, I mean foreign exchange, not a bush. Okay. All right. So once you open this website, it shows you the news for that particular day, the news for that particular day. Then of course you can decide, you can see the news for the whole of the week. Just click on calendar here, it opens up bigger, and of course you see this calendar here. Okay, so for those who are joining us for the first time, I like to also consider them, okay, so that they understand what is happening here. So this is the date of the news, right? This is the time of the day the news will be released. And of course, this is the currency to affect. So on Forex Factory, you get to see news that will affect currency, not currency pair, right? Of course, but if the news affect currency, of course, then it can affect anywhere we have it as a pair. Take note, please. Then this is the impact of the news. So yellow, low impact, of course, brown, medium impact, red, high impact. Okay. So for those of us that are juggernauts in technical analysis, right? Please just pardon me. Let me explain this so that newbies will also get some value. Okay, so this is the caption of the news, right? Then of course these are the data of the news. So we have data and non-data news. Okay, non-data news are speeches, right? Speech from heads of central bank, for example, or something like this FOMC statement, right? So it's a speech, so you'll not get any data, right? Yeah. But for the data news, we have more than 80% of the news are data news, okay? So you want to focus more on the actual, right? The actual is the result of the news, okay? So generally speaking, actual greater than forecast is perceived to be good for the currency, right? Or good for the economy, which means the economy is expanding, right? Or the economy is growing, of course. It will also have an impact on the domestic currency, right? So for today, without wasting much time for today. Now, this was the news of yesterday. Yesterday, we have a lot of PMI, right, that shook the market. Then for today, being Tuesday, the 25th of July, we just have one red impact now. That's by 3 p.m. today on USD. Okay, that's the consumer confidence, right? Consumer confidence. So consumer confidence is just a survey of about 3,000 households, which can which asks respondent to rate the relative level of current and future economic condition, right? So it's just a peep or a look into what the economic condition is in terms of labor markets and of course the employment and the rest of them. So please by 3 p.m. we'll be expecting a news on USD. Okay, so that means you want to trade the news by 3 p.m. So you want to come back to your system if you're very busy, right? Around maybe before 3 p.m., maybe 2:30, right? So that you can get ready for the news. Look at some of the instruments you want to trade, right? You don't want to come to your system by 3. You want to come before 3 so that you can start trading the news. Okay. So actual greater than forecast will be good. Okay. Now, but from now till that time, we don't have any high impact except for this one we have by 9 a.m. Right. So, but this is medium impact. Medium impact. So we'll just jump straight to the chart right now so that we can look at the technical analysis side of things, right? Technical analysis, which is very important. For you to be a profitable trader, I think you need to understand technical analysis, right? Need to understand it very well. All right, so I'll just switch my chart right now. For those of us joining us, please, this is Rally Trade Morning Market Review. Rally Trade Morning Market Review. My name is Emmanuel. Emmanuel. Of course, you know this is e-trading, right? So let me switch my chart, switch my screen right now. So I'll be going to the chart. So I've switched over to the chart. Guys, I've switched over to the chart. Can you see my chart? If you can see just one or two persons, just do chat. Just type chat. Then I'll know that you can see my screen. I can see you there. Thank you. All right, guys. So just like we always do, we try to look at the USD index first. Yeah, it has become a culture. Yeah, it has become a culture. Yeah, we look at USD index. So USD index is actually a basket, or is an instrument that compares the strength of the dollar, right, with a basket of other major currencies like the euro, like the pound, like the yen, right? So you want to know the true strength of the dollar, then you want to consider this instrument. Now, an analysis on this instrument simply means you already know what will happen to the dollar for that day. Then of course, if you do swing analysis, you already know what will be happening to the dollar for the course of that week. Okay. All right, guys. Now, the kind of analysis we're going to do here, there are several kind of analysis, right? But the kind of analysis we are going to do here is market structure analysis. So we want to look at how the chart is building its structure. Now, the structure is nothing more than the highs and the lows and the break of those structure to show continuation in the market movement, right? Mitigation of those structure and of course, change of character, right? To show that the market is about to go to a new direction. Okay. So let's just start from H4 time frame. You guys are following. So let me have a big screen. So I'll just remove my market, my terminal here. That will be Control T, right? Of course, I remove my market watch. That will be Control M. All right then. So the market have shifted from the upside here to the downside, and of course that shift is what we call change of character, right? It have shifted actually. Then now, as you can see again, it has already shifted to the upside, right? The market has started trading to the upside. But let me show you something before we now look at what is happening right now. Let me show you something. So before it shifted to the upside, because you can look out for this to track and to know when the market is about to shift, right? So now look at this low here. So we have a low here. Sorry. All right, so the market puts up a low or prints a low for us here. Look at this low. The market printed this low for us here. Then of course, then from there it gave us this high. Look at this other high. It also printed this high, right? Now that is still valid. That is still valid for a downward trend because this becomes a lower high, right? And of course a lower low. But guess what? It came down again and took out this low. So this small leg here, this small leg that takes out this low, I grab the liquidity there. Then from there, it started pumping to the upside. How? It's traded above this high. So in recent time, that's the first time we are seeing the market trading above the high. So trading above the high is what we call break of structure. But since it's trading to the opposite side, this is now change of character, right? Change of character. So the market have shifted. Now, after every shift or after every change, break of structure, you will expect a retracement. So it gave us a good retracement, right? So what is retracement? Retracement is healthy for the trend of the market. Retracement is what we expect. Retracement is like the market breathing in before it breathes out. Okay. So this is a very good retracement. How much retracement was that? You can use Fibonacci. You draw from the swing low to the swing high, right? So if you watch carefully, sir, you will notice that this retracement came down to 50%, right? And that is considered a discount. As you can see it here, a discount, right? So it touched 50%, that is half of the moves, then gather enough momentum because this retracement coming down is giving traders a cheaper price, or if you like a lower price to buy. Remember, you want to always buy when the price is low. Okay, so you don't buy this up, you buy when the price is low. So after you must have cited this change of character here, right? This change of character here, right? So you wait for retracement. So you gave a good retracement up to discount. Please, we are going up, so you just consider the discount. If we are going down, you consider the premium. Okay, so since we are going up, you consider the discount. So just 50% becomes the discount. So actually this is where the buys are supposed to start from. I hope we are getting value from this. Okay, so actually this is where the buy is supposed to start from, the buying. So let me zoom into the area. So actually this is what becomes a support, right? So this is what becomes a support. This is what becomes a support. So I'm actually showing you how we normally come to terms with reward support. So this is what becomes the support. Why? Because traders will be gathering here to buy, right? Will be gathering here to buy, gathering here to buy. So that was how it started moving up. Then of course they started giving us a higher highs, right? This is the higher high. And of course it gave us a lower high. Of course, this is how the market moves, right? So it pumped up again. So once you see this, you just conclude your directional bias would be that the instrument is trading to the upside, right? So your bias now is the the market is on an upward trend, right? So as you can see, this upward trend. So that means now we have been able to establish that the USD index is on an uptrend, right? So that means we want to be buying the dollar. Take note, want to be buying the now, but we're doing this on H4 time frame. Take note, don't forget H4 time frame. So after this impulse to the upside, we normally expect a retracement. So how much retracement is a good retracement? Don't forget 50% and below is usually termed as good retracement. So the market has not come down to 50%, as you can see here. Now that's one. That's one. Then two. If you go to D1 time frame, please just pardon me. Let me show you this very well. Then of course we can now run very fast on other instruments. So if you go to D1, you can see this long leg here. You can see this long leg here. So if you go to D1, you can see this long leg here. So that can be termed as an impulse, right? Impulse. That can be termed as an impulse. So you can still use Fibonacci and draw from this high, swing high to this swing low. So you can see that the market is yet on D1 time frame. The market is yet to tap the 50%, and I'm very sure it's going to tap that 50%, right? I'm very sure. So during the course of the week, if not even today, this market will come up more, right? It will come up more to tap this 50%, right? All right then. So I think we have seen strength in the dollar. That's what we have seen, right? Because the H4 time frame is on an upward trend, right? And of course, even if you check the H1 time frame, I'm sure it will still be on an upward trend. Okay, look at this, guys. So this is still upward, right? So that's strength in dollar. Take notes. Now, when you see little or tiny retracement, it doesn't mean that the instrument is weak. It is healthy for the market, healthy for the trend, right? So it's because it's trying to gather new traders, I mean new buyers, because it's giving them a cheaper price to buy. So that's why it's coming down, right? That's why it's coming down. That's why it's coming down. So just like it came down here, gather more buys, it pump or it impulse to the upside. It came down again, gather more buys. Please understand this, and that's how the market works. Now, but we are seeing a relatively equal. We are seeing a relatively equal highs here. So this is a high. This is another high. We call that relatively equal high. And that is what this software is calling verified resistance here, right? And of course, whenever I see relatively equal highs like that, in the direction of the trend or in the direction of the market structure, now it will serve as a magnet, right, for the market. So that means the market will be attracted to that level. Okay, so that means from what we are saying is that we are expecting the market to still pump or to still move to the upside, right? So it should still move to the upside. So it can retrace further. It can retrace further, but guess what, sir? It will still move to the upside. That's what we're expecting. So having done this analysis on the USD index, we are seeing strength. Let me check what Finvis is telling me. No Finvis, right? So I'll share my screen right now again. So I want to check the relative strength of the dollar on the website. I'm sure you can see my screen, guys. I'm sure you can see my screen. So sorry. So the 1 day relative strength, right, for the dollar. So early this morning, the dollar was somewhere here, right? But now it has moved to this level. But take note, it's because of the retracement, right? So the dollar, during the course of the day, the dollar will still move further, right? So it is weak a little bit right now because of that retracement. So we've been able to check this website to compare what the chart is telling us, right? No, the matter of 2 or 3 witnesses, you confirm every matter. So this is like another witness for us. All right, guys. So I'll start with Euro USD right now without wasting much time. So let's do Euro USD, guys. Are you ready with me? You're asking what site is that? That's Finvix, right? That's Finvix. So just do let me do this for you. www.financialvisuals. Actually, that's the full name. Finvix.com. So that's it. That's it, sir. Kenny, that's it. Please, can MT4 indicator work on MT5? No, it will not work. All right, so let's continue. So I'll just look at Euro USD very fast. This is Euro USD, guys. Now, throughout last week, this instrument has been pumping up, and guys, we have been expecting a retracement to the downside, movement to the downside, right? But guess what? They gave us movement to the downside some days ago, right? They started trading to the downside. So it took out, it took out this low, right? Then of course, after taking out that low, it has to retrace again. I'm sure you're seeing what I'm showing you. It took out the low, right? So this is the first time we are seeing a lower low, right? And that's a shift. Then it took out that low, then of course it gave us a premium price, right? Which is healthy for a sell. A high price is best price for a sell. So of course, then from there, it started pump and dumping to the downside. So Euro USD have shifted now to on the H4 time frame, please. Have shifted to the downside on the H4 time frame. Now, one of the reasons why we're considering H4 time frame is because we want to know what the position traders, right, are doing. We want to know how they are positioning themselves. So this is the market trading to the downside, as you can see here. So Euro USD is pretty much on a downward trend. So if it's on a downward trend right now, it means we want to look out for opportunities to still sell, right? So the market is about giving us a retracement, which I said is healthy. Don't forget. It's about putting up a retracement. So how much retracement would be a good retracement? I'll just use my feed and draw from this high to this low. So that means this market may just still pump up further, right? But if the momentum is very strong, it may not even get up to 50%. It may dump further. It may dump further. It may dump further. All right, so I'll go down to a lower time frame, guys, H1 time frame, so that I can give you some entries. So that retracement we're expecting may get up to this level. So if it gets up to this level, 50%, I think it's good, right? We get up to this level, 50%. So it is from there we can start selling again, right? From there we can start selling again. And of course, if you look backward, you can see that this level has been tested to be a support, right? Before. So from here we can start selling. So a sell on Euro USD will be ideal following the H4 time frame analysis, following market structure analysis. A sell will be ideal at around this price, 1.11080, right? A sell will be ideal. Let me zoom in to make it bigger, guys. A sell will be ideal around this price. Now you may want to buy now, but I would not encourage a buy now, right? Because of the if you buy now, it means you're trading against the market structure we saw. And it's not always best to trade against the market structure. It's not always best to trade against the structure. It's not in your best interest, right? So I will just wait for the market to give me more retracement to the upside. So I'll wait for the market to give me more retracement like this to the upside. So inside this area, then I would like to do a sell. So I would like to sell there, and I'm expecting the market to drop from there, right? So if we should sell here, sir, where do you think is the target liquidity? So we have protected liquidity and target liquidity, okay? So target liquidity is where your take profit should be, because that is the target of the market. So that is where the market is trying to get to. That is the low or the highs the market is targeting. So how do you know that? If we're on a downward trend, all of these lows are the target liquidity. All the lows are the target liquidity. If we're on a downward trend, all the highs are the protected liquidity. Please, liquidity just means money, okay? It's money. Flow of money, okay? So that means if this place is target liquidity, it moved up, came down to take out that low. That's what I mean. If this place is target liquidity, it moved up, came down to take out that low. So right now, this other area, let me paint it for you. This area is the target liquidity. Just the low, the space below this low. So that means we're expecting another movement that will take out this low, right? That can happen today or even the course of the week, right? Of course, that was how the same thing happened. So if you spend time on this chart, right? Like spend enough time, you understand how this market moves, right? Understand how this market moves. All right, so we are expecting a sell here, right? So what if the momentum during the course of the day, the momentum became very, very strong, right? That it could not move up to this area, right? It could not move up to this area. So that means if the price can trade anywhere below this low, I would still want to do a sell, right? So that means anywhere below 1.10580, sir. If the price trade below 1.10580, if the price trade below, now please I've given you the entries, right? I'm giving you the entries. So you're asking about USD IDX. Now I didn't give any specific entry on USD IDX. I was only using it to get to know the strength of the dollar, okay? But if you want to take a trade on the dollar index, of course you can still take a trade there, right? So what we analyzed there was upward trend, right, for the dollar index. So that means you don't want to do a buy, but buy is best on the support. All right, that's the question for you, Christian. So this is the analysis for Euro USD. We are not doing any instant, or we are not entering the trade immediately, right? Why? Because this is consolidation, right? The market is consolidating, but traders will wine and dine when there is movement. So we are waiting for movement. So that movement will happen if it can break here, or if it can retrace further and give us more premium price, because we want to sell. Don't forget this, guys. All right, so let's look at another instrument very fast. So you're asking what is the sell stop for Euro US? Okay, the sell stop is anywhere below 1.10580. I gave that number, right? What for the sell stop, please? Anywhere below 1.10580, right? So that would mean that it has taken out the targeted liquidity. Then it can further pump down, okay, as an extension. So okay, fine. You're asking for the TP. Of course, the TP would be this level. It will not be above level. So if you watch carefully, you will see a verified resistance. So that will serve as the TP, right? So let me show you the TP. The TP will be around this area. Remember, this area is a protected liquidity, so it can just tap here. Then of course, sorry, it's a sell we are talking about, please. So this same area will be the take profit, right? This, so if you're selling right here, this same area will be your take profit. So that means we are not buying for now, guys. We are not buying. We are selling, but we're not selling immediately. Okay. Now let me look at GPUSD. We don't have time. Let's look at GPUSD. So GPUSD is beautifully fanning down, as you can see. This is so beautiful. Now, if you cast your mind back, maybe yesterday or day before yesterday or this other day, you can see how beautiful this thing is going down. So guys, this is the best place to make money when the market is trending downward. Even the blind can see, it's very clear. So what can we deduce from here, guys? Now, this is impulse to the downside, instead of retracing to the upside. So this is sorry, please. This impulse to the downside, they started retracing to the upside. When it was retracing to the upside, what was it? It was still a downward trend, right? So the area below here is the target liquidity. Guess what? It came back again, impulse to the downside, and make sure it just trade below this low, as you can see. Then I tap the liquidity there, and of course start trading to the upside again. Of course, it did the same thing. So as long as the market is still going in this direction, your directional bias will be to be selling the instrument, right? Be selling it. You have to be selling it. So right now, see, this is the low it gave us. This is the low, right? And now it's putting up another retracement. Now the reason why I'm doing this analysis this way is so that on your own too, you can be able to analyze the market and come out profitably. So I will draw from this high, swing high, to this swing low. So this market has already gone above 50% retracement, which means it's already. Let me zoom in so that you can all see. So this market has already gone above 50%, right? So it has gone above 50%. Should we start selling immediately? The answer is no. So we want to see that the market starts giving us its leg. So the market will show you its leg that, hey, look here, I'm about to start going down, right? And of course, the way we normally note that is to see a change of character. Change of character is at this point, we'll start seeing the first violation, right, of the lows, because the lows are supposed to be getting higher, right? So if you go down to a much lower time frame, like this is the H1 time frame, if you go down to maybe 5 minutes time frame, so that you can see more breakdown of this movement. So you can see that the lows are getting higher. So the first violation we see, I mean the low getting lower, of course, then of course we wait for a retracement. That's called change of character. But for now, we just wait. Believe. Now I've just moved down to lower time. So this is what I'm trying to tell you. So this is the low getting higher, low getting higher, low getting higher. And you can see this very well. So this is actually the use of the different time frame. Most persons do ask the question, Emmanuel, all of these different time frame, which of them is the best? Actually, there is no best. You use all of them for your analysis. So So if you want to see more detail, if you want to see more detail of what the market is doing, that's when you go down to a much lower time frame, right? So this is what I'm talking about. We want to start selling because it's giving us a good retracement, but we don't sell immediately. The first you first see that sign, it will show you first on the lower time frame. I mean, so you can see the lows are getting higher, right? So I don't want to sell when I'm saying this, right? Excuse me. I don't want to say when I'm saying this, right? So I want to see the first violation. What will be the first violation? So this is the low, right? So if the market puts up or prints a new low, something like this, then of course, and pump upward. I will not say hello, guys, right? But guess what? If it's if it move down further, please follow this. So because this is the low, right? If the last low or the recent low, if it pumps down further and trade below this low and do something like this, then of course it has taken out this low, right? So it has tapped. This is supposed to be a protected liquidity, but it has converted it to a target liquidity. They are waiting for a retracement. Then I'll start selling somewhere around here. I hope you guys are following. So So I want to believe you guys are following me, right? So let me go back to H1 time frame. So in that case, now you in that case, that means the sell will be happening somewhere around here. You can see those lines I drew on I think 5 minutes time frame. It means the sell can happen somewhere around here. But I want to see this movement, guys. I want to see this movement, right? This movement. The market start trading towards the downside, right, and takes out this low first. Remember, we are trading with real money, right? We just don't want to jump in anyhow. So the market should take out this low first, then of course give us a premium price that we can start selling. The reason why I want to sell is because on the H4 time frame, look at this place. On the H4 time frame, this is still considered a downward movement. On the H1 time frame, which we just saw just now, this is still considered this is only a retracement to the upside, right? This is only a retracement to the upside. So until this high is taken out, we are still going down. Until this high, you can see this high, right? So you may want to mark this level. This level is around 1.28895. Until 1.28895 is taken out. But please, what I mean by taking out means until the market trades above this high, right? That's what I mean by taking out. So understand the language. Until the market trades above this high, we are still going down, right? So it may want to come higher here to look for more premium price to start dumping to the downside. So I think that will be the analysis for GPUSD, right? So we want to sell. So let me give you some penny order trade here. So if the market does this same thing I do for us, they want to start selling. Okay, take note. I went to 5 minutes time frame, and of course I did some drawing. So let me just go to that same 5 minutes time frame. So you can look at what you can do here, please. You can use your phone and screenshot this if you're using your phone for this session. You can just screenshot this. I'm leaving it for some time so that you can screenshot. Okay, so you're using your laptop, you can also do screenshots. There is a print screen button on your keyboard at the top right corner of the keyboard. Just screenshot this, right, or just print this screen. So once you see this out, then you want to start selling. Okay, we are good, right? So let me jump to the next instrument. So once you see this movement, it takes out this low, and of course print a high, right? Then you want to start selling. Then if you do that, then probably your target level or your take profit level would be you will be targeting this low. So this will be your first take profit. As you can see, verify support here. This will be your first take profit level. Then of course this will also be your second take profit level. Guys, it's possible to have first take profit, second take profit. Why not? If you're using a lot size above 0.01. You can partially close your trade, right? You can partially close your trade. Now, this is for GBP USD. Let's look at one more. Let me look at the chat room. So you're asking which instrument am I? Okay, I'm on GBP USD. I'm on GBP USD. Okay, please be calling out the entries. Not everybody understand this. You don't worry, you get to understand it, right? But I've just called out some price. I say you should screenshot, right? Then later you can look at it. Once that happens, then you can start listening. So USD JPY. Somebody's calling out for USD JPY. USD JPY. So I already have a trade on USD JPY, as you can see, right? But that trade is an aggressive entry. Remember, you can be aggressive, you can also be conservative, right? That entry is a buy entry. So this is USD guys, H4 time frame. So as you can see, this market is already swinging to the upside, right? But it started doing that after this change of character here. Hmm? So, so one thing I want you to do is to learn how to or understand when the market is shifting from a downward trend to upward trend, right? Because the trend is your friend, but there's another clause until it bends at the end. So that means you'll be following the trend, but a time will come when it will bend, guys. So you want to know when the trend is bending. So this is going down. Here, as you can see, keep printing out lower lows, right? So for the first time, the market gave us a high that is higher than the previous high. As you can see that. Mhm. And of course, gave us a discounted price, a cheaper price.